questions. I do have to cut this presentation short today. Usually I go till 9:15, so I have to leave at 8:15. So we have about half an hour to go through the content, through all the positions, trade ideas. So if you do have any questions, please let me know ahead of time by typing in the chat. Good morning, George, Charles, John, Lalit, Raymond. Okay. I encourage you to have 4 positions. We're still trading in the bear market, at least my belief. We're trading in the bear market. All the asset classes are highly correlated. The stock market is overbought at this point, right? Maybe technology can continue going higher because it's, it still has to do some catch up. But the value stocks, that trade is getting overcrowded, right? And you can already see the signs of top building process. Top building process could last days, it could last weeks, but at some point, probably going into the next CPI print, the pullback will start. All right, since we have limited time, let's go over, again, negative visualization. So again, my view, hasn't changed, right? We kind of, if you followed my plan, I think it is reasonable to assume for the spiders to reach 200-day moving average and actually break slightly above that, similar to pattern to value, right? If you want to see what's going to happen to spiders, kind of look at the value, right? The value broke through this downtrend line. It is trading above 200-day moving average. It is facing upper Bollinger Band. It is facing August high. It's reasonable to assume that spiders will follow, right? I don't think it's going to get to 430, but 410, 416 is reasonable to assume. 416, but clearly we're building the top, right? Day 1, day 2, day 3. I think value stocks are a little bit longer. It's been 4 days, they're not going anywhere. So I think at this point, I would only, if you do want to buy, I would buy on the pullbacks, and I would start trimming your long exposure to long. Let's say you're still bullish and you want to go, trade higher. You have, this is support number 1, 395, 390, right? This is where your zones, let's say your market is down, 396, right? You think we can get to 395, right? And this is a good buy because this is this week low, right? The close of the significant rally. So that's usually a good support. So let's say you want to go long at 395. Where's your stop loss? This is, right, this gap, right, where we session low, that 7% rally after the CPI data. You know that, if market trades below this level, below 385, below 380, then the pullback has started, right? So I propose that if you are going long, let's say at 395 level, your exit is 385, 380, right? 385, 380. So 10, 15 points to the downside. Let's be conservative, 380. So 15 points to the downside. So your stop loss is 15 points to the downside. Your upside, 395, we can get to 410. Okay, plus 15. Right, we're still in bull, still November. We have 2 weeks left till next CPI print. PPI was better than expected yesterday. Market didn't really go anywhere. Retail numbers are better than expected. Market is not going anywhere. I assume no matter what the news are, we're not going anywhere. CPI in December, if it's much better than expected, potentially we can overshoot, right? Potentially. But if it's not, if it's like within the expectation or slightly better like last time, then most likely we're going to have the opposite reaction to what happened here. Right? Same CPI data, you have 7% rally. Same CPI data, I don't think you're going to have 7% sellout, but you can have pullback, or at least start of the pullback. So 15 points to the downside, 15 points to the upside. Position size is very important. What does it mean? That on the $10,000 portfolio, most important rules is 50% in cash, right? 50% in cash. I propose that's rule number 1, that you don't break no matter what happens in the market. Rule number 2, on the $10,000 portfolio, you do not risk more than $250, which is 2.5%. $20,000, $500, right? You never, people ask me, should I hold this position or should I not? My first question, are you already down more than 2.5%? If the answer is yes, then you're out. It doesn't matter what your opinion on the market is, because sometimes you'll be right, sometimes you'll be wrong, but certain rules you don't want to break. The third one, no more than 4 positions. Right, and if it's iron condor or you have multiple positions within QQQ, it's still kind of one position. You manage in one position. It's just kind of multi-legged, complicated strategy. And then 4 on the $10,000 portfolio, I propose not to trade stocks more than $100 and 1 contract. Do not buy on margin, right? And when I say margin, options are derivative of the stocks. $100 strike. If the stock is trading at $100, like XLK, you're trading $13,000, so you're already $3,000 into margin. That's how I would look at the margin. And if you trade in banks, okay, then $35 stock, $33 stock, then you do 2 shares. You do 3 shares, assuming same beta. If it's ARC Innovation, then maybe you take into consideration beta. These are, I think, the 4 most important rules. As long as you follow these 4 rules and you never break them, then compounding investment will kick in. You have to pick a strategy that yields, better than flip of a coin, right? 70%, 80%, which this is our goal. Finding strategies that better than flipping a coin, and compounding investment. So very important. Again, any questions on Discord, any questions on GoToWebinar? Just a reminder, I am planning to leave a little bit earlier, so it's important to make sure that if you have questions, I answer them. Okay, we do have Walmart earnings strategy. It pulled back 152.5, so I'm trying to close the call. That's kind of short-term trading earnings strategy. I know some of you did lows, target TJX lows, earnings, slightly better. TJX slightly worse. Target continued to pull back, right? Target continued to pull back. If you did, 150 strike or 152.5 strike, I did 150 strike. I would sell pre-market, sell short pre-market, right? You can look at the bar. I actually look at the chart. Friends from bar chart, giving us pre-market chart, which is nice. And I don't know, Carol, if you did it or anyone else did it. I didn't do it I only did it in my. I only did it in my personal account. But this is an example of negative visualization, right? So I know that we have retail numbers at 7:30. An hour ago, we announced the retail numbers. And then I look at the extended hours, real time. Okay. So Target announced earnings. Right, they announced earnings 7 a.m. in the morning, 6 a.m. Central, 7 a.m. Eastern. Right, it rallies, trades in a range, and then you have at 7:30, right, you have retail numbers, right, and it's slowly drifting lower, right, approaching the strike price. So this is where you can sell short the stock, right? So at 8:55, I sell the short the stock. 152, it's down to 159. I can close the stock, close the short stock, close the short put, right? I'm locking into inverse cover call, right? Cover call, just inverse. Short put, I'm bullish. Short stock, I'm bearish. Lock it in, and now I can close the trade and, well, not now, but the market needs to open. Market needs to open, close the stock, close the short put, and, probably make, at this point, a profitable trade. So if you did do the target, then that would be my proposal. Gold, gold, silver, commodities, anything that's above 52-week high, I would consider, closing or start trimming. right? Any equities, metals, and miners are included. And again, I mean, you don't have to do this today. I think we have at least a couple of weeks of this up and down price action building the top. But the point is, not to chase the market at this point. All right, let me look at my target. All right. Any questions? Closing long and stuff. So yeah, let's review the positions. And as you can see, my strategy has been start trimming the long positions. So last 7 days, my strategy has been trimming the long. NFC I bought because I don't think it's not correlated to the stock market. It has other underlying, momentum, Russia-Ukraine war. So it's not highly correlated to the stock market, but everything else is, highly correlated to the stock market. So I did close the QQQ, close the call spread. So continue to trim the position. So let's look at the market. IWM. Short puts, I think the top build-in process is going to last a few weeks, maybe even longer, maybe months and a half. So out of the money put spread makes sense. So for now, IWM, I'm going to continue to hold the IWM position. NOC, I did add NOC, right? Bought it at 517, bought it at 507 yesterday. We do have reversal. Again, we have these incidents every time, Russia will, send a, missile into Poland, which is a NATO country. This stock will react, right? Whether it's accidental or intentional, it's irrelevant, but obviously the war continues on, and aerospace and defense stocks will probably continue to go higher. So I did add to NOC. QQQ is one stock, one technology has been underperforming, right? It's still far below 200-day moving average. So the theory is that the Amazons of the world, the Apples, the Googles, they are gonna continue to at least attempt to approach 200-day moving average, right, on this downtrend line. So I think there's a little bit more room to the upside in technology stocks, right? In value, very little. They're already kind of, building the top, right? Very similar price pattern to, it could be August, July, like this, right? Or like this, right? In August, we had this rally, it started building. I thought it's going to reverse back, but it had another leg up, right? Another leg up. And something like this can happen here. Already happened, right? We had a leg up here and then build the top. Maybe another one, right? Maybe a little bit, maybe. But but more likely that sooner than later, then we have this, right, or something like this, right? But this is the example of top building process. It takes time, right? It doesn't happen overnight. So for that reason, QQQ, I'm still bullish. I have a credit put spread. Credit put spread works on my side because time decay, as long as we're building at the top, then credit put spreads lose their premium. 300 call is a problem, right? Because the longer I wait, the more premium gets removed from this option. SH, at some point I'm going to start adding to SH as soon as I start seeing some signs of maybe if spiders drop below 390. Right now 390 is a good support, maybe buy SH. Still have a small position in spiders. We'll probably close around 4 once it reaches maybe 405, 415. Walmart. Still have Walmart short call, right? Still have the short call. Sorry, short. Well, I have short put. That's almost worthless. I do have short call. Short call, right? Short call. Still a few days left till expiration, so I can close it as a profitable trade or wait. So for now, I'm waiting. It's still out of the money. XLF. Put spread. So again, banks, you can already see JP Morgan. We talked about JP Morgan. I think it's a positive surprise. I never would expect it to go so high above 200-day moving average. I mean, JP Morgan is at, I don't know, April levels, March, April levels. So definitely very strong rebound, but you can already see it's rolling over, right? It's rolling over. So I do have a put spread. I closed the call spread on banks. XLK, I have a small stock position and I have a credit call spread against it, right? So I'm kind of waiting. Probably just, this will get a sign on both sides, right? So I'm at maximum loss and maybe still have that small position stock that I didn't trim in XLK. And still bearish on XOP. 130, 120 put spread. XOP, just like banks, I think we're going to start rolling over. Right? It's building the stop. I think it's pretty mature at this level. Right? It's been a few weeks. And I think it's just a matter of time to. I mean, there's two scenarios. Either it goes this way, or we can have another top, right? And then it goes this, right? So that I'm not sure. But I would not chase the value stocks. All right. These are all the positions. Let's see. Let me look at my target. Target slowly rebounding. Okay. 152 level. 153. All right, so watch the target, Walmart, Lowe's, Home Depot. Let's look at spiders. All right, any questions? Let's see. IWM ready to roll over. I mean, I'm not sure what definition of ready to roll over is, but it is signs of exhaustion, right? 200-day moving average for 4 days with trading in the range, right? It's trading in the range. I still think we have 2 more weeks higher. The Russell 2000 has been underperforming, right? It's not like JP Morgan where it's trading at April levels or value stocks that are trading almost in year to high. There's still a little bit of room to the upside, right? So, but for now, I don't know about, I would not short IWM, but I would not buy IWM, right? I have a credit put spread, so I'm waiting, right? So I'm waiting. But, I think until it looks like PPI data, no reaction, retail numbers, no reaction. Market is overbought, right? Nobody wants to put any big positions. You can see consumer discretionary down 2%. Transportation is down. Banks are actually doing pretty well. Semis are down. So it's going to be a sign of consolidation, right? So, and these consolidation can take time, right? They can take time, right? It could be like this, right? It could be like here. It took, some time but I think we're in consolidation phase. Fred, yeah. So I think NATO downplayed the issue. Nobody wants to escalation in the war. So I think at this point it's not an event for the stock market. I mean, for the people that died, obviously it is an event, but stock market, I think, at least for now, is dismissing this. TJX, yes, earnings. TJX, I think they're within. If you did TJX or you did Lowe's, you can just close it for profit. Walmart, we're $2 away, so I'm kind of waiting. Target, if you did 152, now it's just time decay, right? Time decay. I mean, the concept of Santa rally, it's I think we are in a Santa rally. I mean, I know Santa hasn't come yet, but in stock market it has, right? It's just a little early. So the concept of Santa Claus rally, usually it's before Christmas, right? But it could be very volatile, right? December could be very volatile because you have CPI data, you have Fed speaking. Market is overbought, so most likely, we're going to do something like this, then big pullback, then maybe another leg up, right? After we digest CPI data, maybe down, maybe then up, and then once we approach next earnings season, I think that's when. So something like this would be my core scenario. Something like this. It's never one-way trade, but something like this is probably what's going to happen. Right, that's my core scenario. Best case scenario, it can do this. Right, obviously, worst case scenario, it can do this. All right, and that depends on CPI print. Right now, the market is at mercy of Fed and interest rates. Nothing else matters. And you can see the 10-year yield spread and the 2-year yield spread again at historical differences, right? We used to be 40 basis points, 50 basis points max. Now we're at more than 60 basis points, 35 plus 27 or 52. But I think we were close to 60 basis points. So this differential basically saying that 10-year yield, maybe in 10 years and 5 years, yield will drop, but in the next 2 years, maybe not, right? So you can see this movements in the yield. And dollar also kind of already mature pullback, 200-day moving average. Probably not going to go much lower than 200-day moving average. And 10-year yield probably not going to go much lower than 3.5, which is already 3.7. So there's not a lot of room there's not a lot of room for market to rally. All right, it's 8:45. Any other questions before we dismiss? Osama from Palatine, how are you? Nice and cold and little snow. It's different from Egypt weather, I assume. 76 to 32. I know, welcome back. I'm going to Florida to get some sunshine. But I'll work from Florida for a couple of days. Bob, Wikipedia, Santa Claus rally is a calendar effect that involves the rise of stock during the last 5 trading days in December and the first 2 trading days following the January. Bob, okay, if it's last 5 days of December and first 2 days of January, maybe pull back after CPI data and then Christmas, last 5 days rally. Just be careful. This is when the tax season, people start thinking about taxes, and I would not, at this point, I would not assume that I should chase the market because market is going to be much higher into the last 5 days of Christmas, of the year, because of the Christmas rally. So I would not do that. Christmas rally. Near the end of the fiscal year, during the last 5 business days of December. I mean, I've seen when market, you have sharp pullbacks and then the rally, and you usually don't want to time this around this. I would not trade based on this assumption that market is going to be higher than it is now, right? Because what can happen, spiders can drop, right? Spiders can drop to 380, right? And then last 5 days they can go higher, right? So everything's relative. All right, 8:47. Any other questions? Feeling good? Sounds good. Cloudy in Florida, Bob. Kevin, yeah, UUP. I'm long UUP. I would be a buyer of UUP. In robo investment, I think that will be my next trade. Buy UUP. It's overdone, and we're probably heading back to this level. So I'm bullish on dollar. But again, it's highly correlated, right? If I think the market is stoppish and it's going to roll over, in the next 6 weeks, the only way it will happen if the dollar is going to rally. So you can't do both, right? If you just consider that you're going to be overly bearish if you're shorting QQQs and you buy in the dollar, right? And you short in TLT, it's kind of the same trade, right? They're highly correlated. So you just pick one, because it's very unlikely that dollar is going to continue to drop and the stock market is going to continue to drop, right? That will probably not happen. Steve, yes. All right, it's 8:48. Any other questions? How's my Walmart doing? All right, continues to drop. Bum, bum, bum. See Walmart. Not Walmart, Target. Target. All right, there's a drop in. Okay, so let's close the short call. Short put, sorry. All right, so this is, I have 150 put, so now I'm closing, short put, and then with the idea that we will retrace this to the downside and I can close the short stop. So this would be an example of how you would defend the position. All right, before we adjourn, sorry to cut this meeting short, but I do have to fly. I have a flight, so I'm traveling. So I have to catch a flight. I don't want to miss it. Any questions before we move on? Yes, Phil, thank you. Scott will do the closing bell today. I will be there tomorrow morning. No, buy euro is the opposite of UUP, right? Euro is opposite of dollar, right? If dollar is strong, euro is weak. So no, it's the inverse. The question was euro, right? FXE, right? FXE goes up, right? Euro is back to 95, and UUP is down, right? So they're inversely correlated to each other. John, thank you. Carmen, thank you. Safe trail. Thank you, Fred. Samabai, right? Inverse. Thanks. All right, guys. Thank you very much. And I will talk to you tomorrow. Thank you.